it's important for people to realize that the more structured it is, the more work that goes into it, the more you're going to be paying away in terms of fees, right? And that would necessarily eat into your returns. You got to have a system, right? It's got to be deterministic. It can't be, I wake up in the morning, I feel like, I wanna realize my gains, and I'm gonna get up over a 10, 20, 30-year horizon. The returns don't really look much better than just equity market beta. Then really, what's the point?
Hey everybody, nice to see everyone here. So we have a very special guest today on Tim Talks Money. I'm going to be speaking to Yujun from IBKR, Interactive Brokers, and he's the CEO of Interactive Brokers in Singapore. So Yujun, maybe just give us a brief intro of yourself, and then maybe we can dive into some interesting topics in this conversation.
Yeah, absolutely. And by the way, thanks for having me, Tim. I'm a big fan of your channel, personally. I like the kind of advice that you give, which, well, the kind of education that you give, right?
Yeah.
Well, introduction of myself. So I'm an accountant by training. So I went to school, NTU, accountancy. And I think the most important thing that I learned about accountancy is that I probably shouldn't do it as a career, because I might very likely end up in trouble. So I joined the stock exchange, and I spent 15 years there. By the time I left, I was head of the equity derivatives business, but I kind of wanted to take my career in more of a fintech direction, because technology, as you know, powers so many things, and it's probably the only growth frontier left that's reliable for the next 10, 20, 30 years. So I managed to join Interactive Brokers Singapore as the CEO, and haven't looked back since.
Yeah, I mean, you guys have done very well in terms of account openings and sort of the digital first approach, I guess, of Interactive Brokers. Can you kind of tell us a bit maybe about the growth of Interactive in Singapore and sort of the timeline?
Yeah, absolutely. I think we started in 2020, so we've been here for about 5 years, and every year has been a growth year for us. I like what you said about the digital first approach. And the way we see it is that we also take an automation first approach. So the interesting thing is that recently we got into the S&P 500. So that was a pretty big milestone for us. The funny thing, thanks. The funny thing is that the word for management was, look, guys, it only took us 48 years. Thank you for the hard work, but we can get in, we can drop out, so get back to work, right? I'm like, okay, that I think that is very much the ethos of this company, and that's what I like about it, which is just get the job done, automate as much as you can, keep the cost base low, and try to pass those savings on to the clients.
Yeah, I mean, I think maybe that's something a lot of investors here, retail investors, aren't aware of, is that Interactive actually has a pretty lengthy history, right, going back to the 70s. And I guess because it's not, being candid, it's not the most user friendly when you're first on it. As I mean, I personally use it, but I'm from that industry. So I think maybe give people a bit of background about what is the main user base of Interactive, right? I mean, it's mainly institutions, but consumers are starting to use it more and more as well, right?
Yeah, absolutely. So I guess, I want to give you, since you mentioned 1970s, then I got to talk about this, right? And I talk about it all day long, but I'll try to be succinct. So I think we were basically the original, one of the first fintechs, even before fintech was a thing. Right. And as you know, our founder famously pioneered the real-time valuation of options on the trading floor. So he actually built and coded his own handheld device, and this was before there was iPads and stuff like that, right?
Wow.
And then he used that to trade, to value his options real time and to trade with an edge. And he was famously banned for doing that until he found an exchange that will allow him to do that. And the rest, he built his fortune from there.
Yeah, it's like almost like he was ahead of his time, and then they kind of caught up with him in terms of the market regulation and everything else.
Yeah, very much, very much. It was a very physical thing at the time, so digitalization, electronic stuff wasn't really widely accepted or even understood. And he saw the potential in that, right? I think another funny story that I've heard, well, interesting story that I've heard is that he started learning how to code because learning to code was easier than learning English.
That's
Yeah,
a good one. Yeah, I mean it's been a pretty unbelievable journey, I guess, for Interactive over the past sort of 40 and 50 years. So yeah, thanks for that. And it's interesting to hear a bit more about the growth in Singapore as well. So I think
yeah,
moving on, I guess one of the points of my, I guess, crusade or trying to get out there and talk to individuals about investing is also just to talk about money and your own personal experiences with money, right? As a young person, I think the Psychology of Money, that book from Morgan Housel, really spoke to me when I read it. It was just about talking about how our experiences, even as children, shape us into adulthood, and what we saw money as when we were young and our experiences with that. We take those habits into adulthood. So I guess for me personally, I'll tell you about my first investment. I mean, my dad only started investing in his 40s. He was always saying that they bought a property in Hong Kong, didn't have enough money to start investing and saving, and so only started investing in his 40s. And he taught me about that kind of stuff. He was like chatting to me about it when I was 9, 10. So I had an interest in it, I guess, from a young age. And it was always an interesting it's always an interesting concept to me, like growing your money, right, rather than just putting it in a bank. And so for me, one of the first stocks I bought was HSBC, or that was the go-to in Hong Kong. I guess the DBS of Singapore, of Hong Kong, right? Everyone in Singapore probably buys DBS stock as their first thing. So for me, that was an interesting concept, right? Just growing your money and being able to understand earnings and understand companies being able to grow profits. And I guess at the end of the day, it's effectively a bet on the global economy. Not a bet, it's more of like you're believing in the global economy, so you're investing in it alongside it, right? I think that's how I ended up seeing investing. So I mean, maybe walk it through me for you as a young kid growing up in your teens and then in your early 20s. What was maybe first off your experience with money as a kid, and when were you first introduced to investing? And then finally, what was the first thing you bought or you invested in, or stock or whatever it was? What did you actually buy?
okay. Yeah, so that's like I said, maybe in the previous generation, that financial literacy was not great. And actually, I wanted to distinguish financial literacy with investing literacy, but we can talk about that a little bit later. If you ask me about my experiences growing up, so I grew up solidly middle class, probably lower middle class. I guess my family did very well by the average Singaporean dream at the time, which
Yeah,
is, work hard. You might be in a blue collar job, which both my parents were in a way, right? They were technicians, crane operators.
yeah,
Um, and save your money, put it into the house. You can put it into and then you upgrade your way into some sort of private property. Of course, we live in the government housing now, which is absolutely fine. 80% of the
yeah,
of the population lives in that. So having lived that so-called Singaporean dream and done very well by it from a family perspective, I think the ethos of growing up in such a growth phase for the country um kind of ingrained certain habits, like you said, right? Our childhood habits, which is, look, all you need to do is to be super conservative, save your money, buy a house, work hard, and
yeah,
you'll be okay,
yeah,
right? I think that may have changed a little bit since,
yeah, yeah,
as you know, right?
yeah.
Yeah. So anyway, so the when you asked me what was the first thing I invested in, so I didn't know it at the time, but I was running a little, you call it an amateur business in trading cards. So this was in primary school when I was like 8 or 9. I was really super into these Dragon Ball cards. I don't know whether you
Dragon Ball, I
remember
remember
those.
Dragon Ball. Yeah, they were like they were awesome, man. Yeah, those Dragon Ball cards, they were fun. I was playing, was it Street Fighter as well? It was like big on like the Super Nintendo
Yeah.
the day, like all those kind of cartoons and games. That was really fun.
Yeah, all the collectible
Yeah,
cards, right?
yeah,
And so I bought a whole bunch of those with the pocket money that I've saved up. And the funny thing is I bought so many that the shop owner asked me whether I'm interested to just buy the shiny golden special ones from him directly
Yeah, yeah,
because he had a stash of those, right?
right.
And that I think was my first introduction to capitalism, which is, if you're a big enough customer, sometimes you get special treatment, right?
Yeah.
So I managed to get my hands on a great, reliable supply and reasonably priced supply of these special golden cards, and I took those and I went to school and I flipped them to my friends
Yeah.
for a reasonable profit. I like to think.
Okay, that's cool. Yeah. So I mean that's sort of the maybe the Warren Buffett style of introduction where he was I know he'd take newspapers and or he would deliver newspapers. He got a job and then he would sell certain things when he was young as well. So it's kind of an introduction to growing your money through business, right? Or being an entrepreneur.
Yeah,
Yeah.
yeah, and kind of like buy low, sell high, and you
Yeah.
realize that some of the cards have a particular value that they may not be selling for a lot now, and you kind of hang on to those and wait for the market to
Yeah.
come round
Yeah.
somehow. So you can time it a little bit if you have some conviction as to where it's going.
Yeah, and collectibles as well. I guess collectibles is something the concept has always been around and it's still popular today, whether it's like watches or wine or art, right? I guess that kind of thing is still holds it still holds water today. Okay, and cool. So and how did you kind of get into the financial industry? I mean, how did you get interested in investing? I guess that's more the financial introduction to money capitalism, and then how did you move into sort of investing? Well, you said you're an accountant, right? And then how did that
Yeah.
transition happen from there?
Yeah, I think going back to what we had discussed earlier, which is I think the Singaporean dream has changed a little bit.
Yeah,
And as a millennial, so I'm in my 40s now.
yeah,
And if it's always felt to me that I was trying to catch up to asset prices, right?
right.
Just when I thought that I made enough money, that I can finally afford, to buy an asset or like a house or, a depreciating asset like a nice car.
Yeah,
Um, that those prices seem just out of reach,
yeah,
so you're always chasing that.
facing that
And
thing. Yeah,
yeah, and no matter how much you try to save, like if you're making, for example, as just starting out, 3, 4, 5 thousand dollars a month,
yeah,
and you try to save between 500 to $1,000 a month, it always somehow feels like insufficient. Like end of the year, you get 12 grand, and
yeah,
then what are you gonna do with that? You can't buy anything with that,
yeah, yeah,
right?
yeah.
And I think that sparked me on this. Okay, I better start to figure out how do I create some value from the money that's just sitting there,
Right.
right? So of course, in the background, there's always theory that you learned in business school or accountancy school about inflation, asset prices, risk-free return. It doesn't really hit you until you come out and you've got to start adulting, right? You got to start living your own life, you got to start paying
Yeah.
your bills, and realize that wow, this is a lot harder
Then it look.
than
Yeah,
yeah than it looks. Yeah.
yeah, yeah. Okay, wow, and that's I guess the five C's, the whole thing about credit card, was that something that existed back when you were growing up, or was that more sort of maybe like later generation or early generation, or has that been around for a long time for sort of millennials?
Yeah, it was very much a part of the upbringing when people were talking about it, and you read about it.
Yeah.
Um, there was a very popular Singaporean comic at the time. Now that we are going way back, right? Called Mr. Kiasu. I don't know whether you remember that.
No, 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 I don't think I've heard of him. No.
Okay. So Mr. Kiasu was, supposed to be a caricature, I suppose, of your typical Singaporean,
Yeah,
chasing the five C's,
I think, yeah.
always about money. And then he has a cousin or brother called Mr. Kiasi, who's the conservative side of that, right? So
Yeah,
it was really cool, right?
yeah. I guess
Yeah,
that's like,
but very much, yeah.
and this is sort of, yeah, I mean, I guess comedy and that kind of that thing is always this. There's always a social commentary, right? That I guess characters are shaped around what's happening in that time. Like whether it's in the
Yeah,
90s, there's always going to be characters that kind of fit that. Just like in, I guess, Western movies in Hollywood, in the 80s, you had the Russian bad guy. And obviously now it's like the Chinese bad guy or the North Korean like villain, right? It's
yeah,
kind of a reflection of society at that time. So that's always something I always find pretty interesting.
yeah.
So I think,
I think we can drill into that a little bit deeper, which is I think a lot of the um, so-called materialism, the dream of those five C's,
yeah,
um, and that constant need for a secure asset, which is like buying a house, right? And that
yeah,
was a biggest thing while I was growing up, which is when I gonna buy a house, right?
Yeah.
Um, I think that comes a little bit from, I think, overall our migrant roots,
Yeah.
because most of us here are third, fourth generation migrants,
Yeah.
right? And
Yeah.
having lived through that insecurity, not personally, but through your family,
Yeah.
it gets ingrained into culture, which is to say, look, we better secure something for ourselves so that we never have to suffer that again,
Yeah.
right?
Yeah.
And that has basically perpetuated, I think, even to today. Well, even though the challenges are a little bit different, but that insecurity, I think, is still in there somewhere.
Yeah, that legacy, I guess, of that struggle of earlier generations, right? But I mean, yeah, I think that's a good point because I guess our parents also shaped the way that we believe in investing in assets, how we should use our money, what we should do with it. So I guess this is a pretty good segue to talk about the risk appetite in Singapore, because I mean, coming from Hong Kong people love to make money, right? They are really into the stock market. And I think it's maybe the polar opposite of here in Singapore, where maybe a lot of investors don't want to put money into the stock market. Whereas in Hong Kong, there's a lot of trading and there's a lot of, punting on IPOs and all that kind of thing. Which I don't think is not exactly responsible. But in Singapore, do you think it's a concept that, or do you think how people have become risk averse is a mix of, obviously CPF is an unbelievable structure, right? People get paid 2.5 and then 4%. It's almost like you don't want to take risk, or you're not going to be properly compensated, you think, in the short term to take risk. And then it's almost as though it becomes, you fall into the habit of maybe the money that you need in 10 years, 15 years, it just happens to be in CPF, or you don't think, I don't need to invest it because I have CPF. Is that part of it, or is there also an element of they've been burnt by maybe the penny stock crash, the sort of China stocks in the 2010s, and people just are perhaps scared to put their money to work? Because it's quite amazing how many people I come across who might say, "Oh, I've got this amount in T-bills and SSBs," and it might be 70 or 80% of their overall net worth, and it's almost as though they they there's a safety blanket there, right? Is that how you think about it? I mean, what would you say is the the appetite of the average Singapore investor, and why is it, to me, it seems quite risk averse, I would say.
Yeah. So I would give perhaps quite a nuanced answer here. So I think it's hard to pin down what exactly is the average Singaporean investor.
Yeah,
But I think it might, so again, generalizing slightly, even though I'm trying to make it a little bit more precise, would be that perhaps people of the older generation that had lived through that struggle, they would generally be more risk averse, right? They would prefer real world assets like houses or even T-bills.
yeah,
They don't want to, they saw the penny stock crash, they saw the whole clock thing, they don't want to get into that.
yeah,
Um, but I think the younger generations have come to realize that you do need to do something with your money that's a
yeah.
little bit more growth focused,
Growth oriented. Yeah,
um, growth oriented. So if you say Singaporeans are risk averse, I would say outwardly yes, we do
yeah,
look quite risk averse. But the interesting thing is through our own observations, right? A lot of flows or investing flows go to the US in search of growth,
yeah.
right?
Understandable.
The government has been telling people that for the longest time, look, crypto is not an investable asset. Don't get into something you may not necessarily understand,
Yeah,
but people get into it anyway. They find their ways,
yeah,
and even down to everyday things like buying the lottery, right? Which is also a big thing in local culture.
yeah,
Um, is that's perhaps the riskiest thing because you're basically 99.9% guaranteed to lose your investment
yeah,
upfront, right? So,
yeah,
um, so so I would distinguish it like this, right? I think Singaporeans are not super risk averse, but we may not be the most risk savvy,
yeah, yeah,
right?
yeah.
Um, and I think that through education and channels like yours and the work that we're doing, I think we can try to change that and improve that a little bit.
Yeah, no, definitely. I think, I guess you made a good point. I would say, yeah, younger investors have definitely taken a liking to the US market, right? And I guess we'll touch on this later, but Singapore's market in the 2010s just didn't really excite people. Whereas in the past sort of obviously 10, 15 years, the US market is where all the action is for capital appreciation and growth. And maybe that's a reflection of how people feel like they need to catch up as well, younger investors, right? They've not got, you're not going to be able to buy your condo or your HDB with as, I mean, as little in terms of your a multiplier of your annual income as you could have done maybe 30 years ago, right? You're going to need more of your annual income, times like 5 or 6 or whatever it is now than 30 years ago. So I guess there's that element of maybe FOMO with younger investors. I don't know. Do you kind of see a lot of younger investors on the platform and on Interactive kind of going into the US markets? Are there more flows? I assume it's natural to assume there's more flows into the US, right?
Yeah, I would say that that's a fair statement to make. It's very hard to ignore a bull market, and the US has been in a bull market for the past, I don't know, three years since
Yeah.
we came out of COVID. And I think nobody at the time, just after COVID, really saw the whole AI thing coming,
Yeah.
right? So that kind of shocked us. And you find that it's become pervasive. So people use AI every day in their lives now.
Yeah.
Um, and I think that leads to a very much popular or popularism kind of driven growth in AI.
Yeah.
And we see that in the stocks as well, right? That just the explosion of it. Whether it ultimately can end up making money, is a different question.
Yeah.
But because you use it, therefore, it's easier to buy into the companies that do it.
Yeah.
Right? I think there's a lot of that. And of course, again, what I said earlier about my career, wanting to take it more fintech direction, because I think, throughout society, right? If you look at Stone Age to the Bronze Age, even then, and eventually the Industrial Revolution, it is actually the improvements in technology that have driven increases in productivity and has fundamentally changed human civilization, right? And
Yeah.
so that's the only persistent, growth that we're ever gonna see in the entire history of civilization going forward as well.
Yeah. Yeah. No, that's a good point. That's a good point. And so I guess about Singaporeans and products. I mean, moving on to the product set in Singapore, I guess what I've always said is that generally low cost for me in terms of a product tends to be something that is usually quite simple to understand and usually gives you at least an at market return, which is what you're looking for, right? Minus whatever the expense ratio is. So I think when we talk about financial services, a lot of the products that are sold tend to be complex just by any standard for people to kind of grasp. And one of the things, or the beef that I have with one of the big ones out there is ILPs, right? I mean, ILPs, there's been that massive debate recently, and then sort of Christopher Tan from Provident came out with that article in the Business Times, and then there was a sort of riposte from someone else talking about how they shouldn't, it shouldn't be you shouldn't have a blanket statement where it says you don't need it in your portfolio. So I mean, ILPs I've always thought of as just neither the best. It kind of doesn't really underinsures you, first off on the insurance side, and then it underperforms on the investment side, right? And it's more a function, I guess, of incentives. I'm not saying that these people who sell ILPs are bad, like unethical people, but I think the incentive structure incentivizes them to sell them, right? Even as products that are not meeting investor goals. So I mean, how do you square that with, I guess, the experience in Asia? Because in Hong Kong they're also very popular ILPs, but it's more of a model that I think is probably like 10 or 20 years behind other markets that have moved on from those types of products, right? Who've moved on to other low cost options or different models. I mean, why do banks still dominate the distribution business in Singapore and in Asia generally?
Well, okay, so that's a very broad topic. We talked about complex products, ILPs,
Yeah.
and banks. I think we can kind of break that down. To start with this, right? I think we are philosophically similar in that we much prefer low cost, transparent products, which is what Interactive Brokers is all about, and you've also mentioned that a few times. I think it mainly is good for people who kind of know what they're doing, or they know what they want and they're willing to do the work and the research to get there, right? Earlier you mentioned about our platform may not be the most user-friendly experience for beginners.
Yes, yeah.
So it's a continuum, right? You want it to be like the Tinder for stocks, some apps out there. You swipe around, there's confetti, great,
Yeah.
right? If you like that, sure.
Yeah.
Or you want a more professional grade platform, so I think we skew very much more towards the feature rich.
Right.
And also low cost,
Yeah.
right? And transparent. And I think that is important, and that works very well if you know what you're doing,
Yeah.
right? Or you're willing to learn to figure it out. I would say that the complexity of products, I also agree, because look, companies are banks are here to make money, structuring firms, asset managers are here to make money.
Yeah.
So like you said, don't hate the player, hate the game, right?
Yeah.
That's how
Yeah.
capitalism and society is set up.
Yeah.
And that's how the incentive systems are set up. So it's important for people to realize that the more structured it is, the more work that goes into it, the more you're going to be paying away in terms of fees, right?
Yeah.
And that would
Yeah.
necessarily eat into your returns.
Yeah.
And so it takes some experience maybe, or some study of the market to understand that ultimately it's all the same underlyings,
Yeah.
right?
Yeah.
You buy a structured product, it's going to buy into Amazon or a bunch of tech stocks and stuff like that, right? So how much fees are you willing to pay away is almost inversely, or quite perfectly inversely related to how much work you're willing to do to figure it out yourself, because
Yeah.
you can achieve those same return profiles by just going to interactive brokers or other online broker to execute that strategy,
Yeah. Yeah.
right? And so I want to come to the ILP part. So actually, I did spend a brief period as a financial advisor.
Mm.
I wasn't a very good one, because I didn't like selling the investment products because of the sheer amount of costs and fees in there,
Yeah.
right? And I wouldn't even say they're hidden, because the government has done a pretty good job of saying that you need to disclose all these things. It's just that it's a bit like the IPO prospectus, right? The more you disclose, the more things become harder to pick up, right?
Yeah.
End up with like a 300-page document that do
Wait.
I have to read all of this to understand what's going
Yeah.
on,
Yeah.
right?
Yeah.
Yeah. But it's a necessary thing in a disclosure-based regime. People should know what they're getting into, but I think most of the time they kind of get distracted by the dream, right? And that's how most people are taught to sell personal financial products, which is don't sell the product, sell the dream,
Yeah.
right? So I would say, any products, including ILPs, they kind of work for people who were not gonna invest in the first place,
Yeah.
right?
Yeah.
If money is just sitting, the old saying in Singapore is you put it into a Milo tin can and put it under your bed,
Yeah.
right?
Yeah.
So ILPs, at least you're getting out there, right? Like, I mean, I hope they understand the risk
Risk of it. Yeah.
that they are taking, right? Which is equity risk,
Yeah.
you know. But otherwise, overall, a good thing to get the money out there and working for you.
Yeah.
But for everybody else, right? Especially if you're one of the younger people, digitally native, you can learn everything you need to learn about the market, from channels like yours, or just Googling it,
Yeah.
or on TikTok, right? And you are on TikTok, short
Yeah.
15 seconds, which I think fits the attention span of most people these days.
Yeah.
Learn what's an ETF, what's a stock,
Yeah.
what's DCA.
Yeah. I
There's
mean,
really no excuse, right?
that's
Anymore.
true. That's true. I mean, I do give ILPs a lot of hate, but I have to say one thing, I guess, in their favor, or what I would say is a advantage of the structure, is that it makes you, because of the incentive not to pull it out, it makes you stay committed, right? And I think
Yeah.
for a lot of retail investors, the problem if they do the DIY route is that if the market declines, and they just pull out the money, or they just get scared, and they kind of destroy wealth that way by really making emotional psychological mistakes rather than it being like a fee driven thing, right? Whereas I guess the ILP structure, it does force you to save. I mean, obviously at a very high cost, but it does force you to save, and it maybe incentivizes you not to think, or if you do pull it out, you're going to give up whatever 70% in surrender value. So I'd say that's probably one benefit of it. Do you think people, there is too much emotional kind of trading, or people aren't fully aware of how much emotions play into investing, and kind of having a long-term plan as well.
Yeah, very much so. So I will definitely I will agree with you on the ILP um hate in that I think the single premium upfront investments
Yeah,
are not great
yeah,
because you're basically trying to time the market. And if you're trying to do that, just do it yourself,
yeah,
right?
yeah, yeah,
Yeah, instead of paying all the fees away.
yeah,
Um and but also agree with you when you say that yeah, it forces discipline, it forces actually DCA,
yeah,
right? Dollar cost averaging,
yeah.
right? So every month you kind of buy into it. Of course, it takes a long time because all the fees are front loaded, right? So you actually don't get up to par
Until
for
later,
years.
yeah, for a while, right, right.
Yeah, but as long as people are aware of that, and it's a 20, 30-year dream that they're buying into, sure, it can work for some people.
Yeah.
Um, sorry, I got a little bit distracted. So where were we?
And then no, and then yeah, I think I was just saying, like yeah, I guess like emotions. I think emotions take on too much
Ah,
for the DIY investor, right? In terms of even if
yeah,
it's an ETF or a FTSE All World or a MSCI Acqui, they just people are a bit they're just too trigger happy, I guess. I guess maybe
yeah.
nowadays because we can trade on our phone, we can sell, buy, sell, whatever it is. It's almost too easy to hit the sell button at times, and you really shouldn't be making any sell decisions.
Yeah, yeah, and I think taking profit is very often an emotional reaction to say, look, I really made this much money.
Yeah,
Who knows when the market is going to turn? I should get out. And I think most of the professional traders out there, they tell me that you got to ride your winners and you got to cut your losses early,
yeah, yeah,
right?
yeah.
So it's the opposite of what the
A lot of people.
crowd tends to do.
Yeah,
And I think, if you're actively investing on your own, that's probably one thing that you want to keep in mind, which is you gotta have that long-term plan.
yeah,
Yes, but you gotta have a system, right? It's gotta be deterministic. It can't be I wake up in the morning, I feel like, I wanna realize my gains and I'm gonna get out, right?
yeah,
You gotta be pretty disciplined about it, meaning that if it hits your stop loss, you gotta get out, no matter how bad you feel about it,
yeah.
right? Realizing that loss, I think, is always a big barrier, and also to resist the temptation of greed,
Agreed. Yeah,
right? To say that yeah, I doubled my money, I should get out now. Well, because it's getting out early or taking out profits early is absolutely I think in my own mind a good thing to do, or what I would do if I was winning money at a casino.
yeah, yeah. You would take it
But
out.
not so much. Yeah, I would take it out and I walk away, right?
Yeah,
And have them chase after me and maybe beat me up in the back at least somewhere. That doesn't happen in Singapore, but I watch enough movies, right? um, but leaving your gains in the stock market to compound, I
yeah,
think that is, what all the professionals say.
yeah. Right. Yeah, that's sort of at the market level, right? Which I think is different to a stock. I mean, a stock and the market are very different instruments, I'd say, or tools to grow your wealth. Yeah,
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 yeah, absolutely. I think, having your core portfolio, as I think you have said,
yeah,
in ETFs and other low cost instruments and kind of take market beta,
yeah,
um, over a long period of time, it has been proven to work, and the numbers are in favor of that,
yeah,
right? And
yeah.
then, stop picking, life's got to have some excitement. You can buy 40, you can buy total $10 million now, apparently. Or you can buy a stock, right? So, you kind of pick your poison, right?
Yeah,
Sometimes.
yeah, that's true. You kind of have your core and then your satellite, right? Your kind of
Yeah.
split or your bets or whatever, or individual stocks or thematic ETFs you kind of want to own on the side, outside of your core. And I guess that's a good segue to talk about different types of assets, right? Because nowadays we're seeing in the robo advisory space, or even just anything in the fintech space, there's a gravitation towards obviously advisory for high net worth individuals or AIs or accredited investors. And what I see is a lot of the pushing of these types of private equity allocations, and why you should have an allocation to private equity. I mean, my personal opinion, we've kind of spoken about this before, is that it's more of a, oh, I've got exclusive access to this new fund from this, insert whatever sort of big private equity house. But if you look at the actual data and the performance, and tally it up after fees versus the illiquidity of the product, doesn't tend to do much better, or it tends to actually underperform something like the MSCI ACWI, over the long term. So is it a case of these guys, obviously you need to make money. I mean, we know that's the name of the game in financial services. And obviously these have fees. They have higher fees. There's more money to be made. Selling a low cost ETF is, let's be honest, doesn't make money, right? So do you think it's a function of these kinds of houses and these kinds of services, they need to push that as a allocation? And I know high net worths love to think that they've got something special, right? So what are your thoughts on, I guess, private equity and the allocation? And do you need it as just an average retail investor?
So nothing I say here is investment advice. So
Yeah.
my thoughts about
Yeah. We'll put that, nothing
yeah.
here personalized financial advice. I should have
Oh
said,
yeah.
yeah. Nothing here
That's important, right?
in this chat, yeah, is anything personalized financial advice, just your own personal opinion.
Yeah. So to that point, right? I think you've hit upon the key messages or the key ways to think about private equity, which is the are the returns worth the illiquidity, right? And I think as average Singaporeans or average investors anywhere, a lot of your life is already highly illiquid because at some point end up buying a house,
Yeah.
right? And you lock out all your money. And that's both a comfort because in the worst case, you can, it doesn't appreciate, just stay in it
Yeah.
until you are no more,
Yeah.
right? Um, do you want to add to that illiquidity with these investments, right? Even from an AI or high net worth individual's perspective, does it necessarily make sense to pay that amount of fees and to lock up your money for that long?
Yeah.
Well, actually, quite an uncertain return, right? And I think a lot of the push into the retail or the mass affluent space by private equity firms. So I saw a couple of articles that talked about this. It seems like the institutional investors are getting a little bit jaded with private equity.
Yeah.
And so they gotta look for the next source of funding, right? And for
Right. Yeah.
fees.
Yeah.
Yeah. I don't know to what extent that is true. Of course, many firms will deny that, but
Yeah.
you can't escape the fact that, if over a 10, 20, 30-year horizon, the returns don't really look much better than just equity market beta,
Yeah.
then, really what's the point,
Right. Yeah.
right?
Yeah. But there's always, I guess everyone has the data to try and slice and dice and put it in the favor of private equity, I guess. But it's almost like the average investor doesn't, I guess, benefit overall. You can't access a product. I mean, I always say this, even if you've got 20 or 30 million, you're not a Temasek that has 10 billion, or a GIC that has whatever, how many billion to invest, right? So are you going to get the best deals? Whereas I guess for me, the playing field when you access equity markets is whether you're a GIC or you're just an average retail investor, you can buy the same exact thing at the same, obviously maybe trading costs are slightly lower for a big investor, but effectively the same thing, right? Whereas are you getting the access to the best deals as a $20 million high net worth person? Probably not, right? I assume you're not getting the best deals, and there's no private equity index you can buy, like you can buy an MSCI ACWI or a sort of S&P 500 index, right? So, I mean, how do you think about that as well from a deal perspective?
Yeah, I think largely true because, and I don't know whether it's a reflection of our society today where, 20, $30 million, it's a lot of money, but it's
Yeah,
still not enough, for you to be the biggest
yeah,
guy in the room,
yeah,
right? Uh, yeah, so you do end up consuming at that level of wealth a lot of very expensive services.
right.
And part of that will be your private banker and the
Yeah,
private equity investments that he's trying to sell you,
yeah,
right? Yeah, and by the time, because there are so many layers, and like you said, the sovereigns, the people with the real money, they get the best deals, they get the first look,
yeah, yeah,
right? And they actually have entire teams of people to kind of figure out what's good and what's not.
right.
By the time it hits the so-called mass market, or even the private wealth market, which today seems quite mass, right? I'm not a private wealth client,
Yeah,
but there seems to be a lot of them out there, right?
yeah, yeah,
Um, And by the time it hits that market, it's been packaged and stripped down, and many layers have gone into it. Not maliciously, like you said, but
But
just because
yeah,
that's how the system is set up,
yeah,
right? And then you end up with market returns.
yeah,
So, but there is a little bit of that special, you buy a Rolex or you buy one of these electronic watches for $500, right?
yeah,
So you
yeah.
again, you kind of choose what you feel like your net worth allows you to afford. And
Right.
if that's private equity, sure, go ahead, right?
Yeah,
But I do think that the average retail investor's gotta take a very hard look at it, if and when it finally gets there, right? That your personal banker at the bank is trying to sell you this thing. It's you gotta put it, I think, in the same bucket, or I would put it in the same bucket as ILPs or any other highly structured product, which is,
yeah,
really,
yeah.
is it worth the fees? Right.
Fees. Yeah. No, definitely. I mean, I think I agree. I think I called structured products the ILPs of the private banking space. That's probably what I'd say. They kind of like to put it on as fees. There's like you have no idea what you're buying, but there are loads of fees in there, and it usually benefits the selling agent. But yeah, I guess it's one of those that will always kind of, as you said, it's the structure of the incentive system anyway. But no, I mean, I think before we sort of wrap up, it'd be interesting just to touch on the market as well at this point, because obviously Singapore's market this year has done incredibly well. Actually, this morning DBS just came out with earnings better than expected, but they were up pretty strong. Um, but what is your take on what you're seeing, I guess, from Interactive Brokers' perspective in Singapore? Is there more interest in the local market, in banks? Is it more the REITs are getting a bit more interest, or is it these alternative growth stories like, I don't know, a SemCorp or a Singapore Technologies Engineering? In terms of the flows, are investors coming back to the Singapore market?
I would say that there's definitely a lot more buzz this year, especially in the past few months for the Singapore market. I think a little bit of it is, or some part of it is flight to quality.
Mm,
So, as a native Singaporean, I always tell my friends who try to understand what Singapore is, that we are boring and we do boring so well that it becomes profitable, right? Um, And so, when the messier the world gets, the more interesting Singapore becomes. And I think, like you said, DBS or other stocks have shown very strong fundamentals this year,
yeah,
right, in Singapore. And, while it's fun to chase that AI growth story, it's reached a point where people are saying it's probably, there's some bubble going on, right? And it's a matter of time before that bubble pops. Whereas in Singapore, you find that the stocks are all very sensible stocks. So perhaps, in a bull market, a global bull market, not so interesting.
yeah,
But when valuations elsewhere look super overheated, you kind of think, okay, where should I be putting my money that, I wouldn't get burned by this and actually generate a decent return over time. So I think a lot of that has caused the market to do well. At the same time, like you said, REITs, of course, naturally benefit in general from the falling interest rates.
yeah,
So I think that helps. I personally feel very uncomfortable about the whole interest rate situation because I haven't seen a non-farm payroll for a month now.
yeah,
So
yeah.
I
The strike, the budget, it's sort of like the federal workforce, right? So the data is just not up. It's just not there right now for investors to have an assessment of what's going on with the job market.
yeah, but the private job market seems to be kind of okay, right? The latest data shows. So I think perhaps not so bad, but lower interest rates do help the stock market in general and also REITs very much. So that does help Singapore because we do have a lot of REITs here.
Mm,
And I think in general, the buzz also comes from what the SGX and the MAS are doing, having recognized that I think we need to, borrowing is good, borrowing is profitable,
yeah,
but at the same time, we do need certain engines and drivers of growth for the future.
yeah,
And I think that's again, back to the originally what I said about technology is that there's only one answer,
yeah,
frankly, in the room over a 30-year horizon, right? You've got to get more um, cutting edge, deep tech, not necessarily AI, but deep tech, big
yeah,
tech firms here.
yeah.
And I think there is a reasonable story made for that. So the measures that they put in have generated, I think, more confidence in the
Mm,
market.
mm.
And I think that has a lot for the valuations to improve. And actually, the STI has done pretty well,
Yeah,
right?
it's done really well this year, right? And I think it's been driven by maybe not so much the banks, but other sort of emerging sort of blue chip companies, I guess, or resurgent blue chip companies.
Yeah.
Um, that's a good point. And how about what are you guys seeing in Hong Kong? I mean, Hong Kong now is back. Everyone's a bit more excited about Hong Kong, China, IPO markets roaring in Hong Kong. Are you guys seeing more sort of retail interest in the Hong Kong, China market?
I think yes, mainly because, so about this whole AI decoupling between
Yeah,
the United States and China. I followed it and it's to me highly interesting because I think while on one hand it does slow down the development of technology in general, right, on the mainland.
yeah,
But at the same time, it's forcing self-reliance,
yeah,
right? And necessity is always the mother of invention. So where previously they could rely on global supply of technology, now they have to be a lot more self-reliant, and I think that's really helping them to push the boundaries of
yeah,
getting new technology. So I think a lot of that is driven by the early stages of a tech boom.
yeah,
Again, not at the what some might call the froth level, which is the LLM level layer, but in the picks and shovels layer, right? Chip manufacturing, just getting better at doing it. Long way to go before they can actually catch up with TSMC,
yeah,
but they are making progress,
yeah,
right? And this should be the start of it, and I think we see that reflected, right? And also China, China is always amazing to me, the ability for them to fundamentally transform their economy at basically in the blink of an eye,
yeah,
right? So of course EV is very very interesting now in China, very competitive.
yeah,
I've also read, but it's driving innovation,
yeah,
right? That amount of competition is driving innovations from the sheer necessity of needing to differentiate your product and just get better at it.
yeah. Yeah, I
Yeah.
think that's something that the US maybe suffered from. I mean, the big three in Detroit, it just seems like they've been static and not done anything. Whereas you've kind of seen the BYDs and the Neos and then Xiaomi as well coming out with its own car, its own EV. It seems like they're just light years ahead of manufacturers in the West. And so it's a really interesting story. I mean, the SDRs, I guess, is a good reflection of that. I mean, Singapore depository receipts here in SGX of Hong Kong stocks have been floated. So, do you see much interest in those from an investor perspective? Because I think more investors are interested now in accessing it like an Alibaba or a Tencent in Singapore dollars versus going to Hong Kong.
Yeah, I think it definitely lowers the barrier.
Mm,
And so, the SDRs have picked up a little bit,
yeah.
right? It does lower the barrier because, you could come to a global broker like us
Mm,
and just do direct into the individual markets.
yeah.
But if you don't have the time or don't have the inclination to get so deep into, multinational investing, if you will,
Yeah.
um, you would just buy whatever's available on the local exchange,
Yeah.
right? So I think SGX in that has done a good job in kind of teasing out what is the use case for the SDRs, right? Because Hong Kong is not a closed economy. It's quite easy to access, especially to people
Yeah.
like us. It's just that, yeah, it feels a lot safer and it feels a lot closer to just buy on the exchange,
Yeah.
right? There will be some fees, I think, in there. But then again, if it's listed on the exchange, usually the fees are transparent and pretty low,
Yeah.
right?
Yeah.
Generally speaking, as compared to something that you buy off the counter from your banker.
Yeah, and I guess because of the exchange rate risk or exchange rate nowadays with the US Hong Kong dollar peg and then Singapore dollar, it gives people comfort buying in Sing dollars, right? I mean, a lot of people even like, I want more assets in Singapore dollars. I don't want as much US dollar exposure. Is that something you're seeing as well with Singapore clients that they just want maybe more Singapore dollar assets or less USD exposure?
Yeah, absolutely. I think overall Singapore has become a lot more attractive in many on many fronts, right? Stock market because of strong fundamentals. The country itself very, very stable politically as well as economically.
Mm,
Fiscally stable, which is important, right?
yeah,
Because of quite conservative fiscal policy. I think there's a reason for that, right? It always plays out well, to our advantage
yeah.
in the long run.
AAA credit rating,
Um,
right? I mean, it's like the top for
yeah,
the government. It's just everything's solid fiscally.
yeah, precisely. So people do have a lot of comfort, like you said, storing their wealth here.
Mm.
The relatively low tax regime also helps. And so the conditions have, kind of all lined up, which is why we see that, Singaporean assets, Singapore government bonds, for example, all these have been increasingly popular over time because
Mm.
people recognize, right? Well, basically the next best thing to gold in terms of an uncertainty hedge.
Yeah, yeah. No, definitely. And I think maybe we could end off with something that has always been a pet peeve of mine. I mean, even trying to buy in Hong Kong, like, these board lots, which I feel are like a relic of, I don't know, the 80s and 90s. And it still exists today in Singapore, Hong Kong. You can only buy a certain amount of shares. And maybe if you want to buy DBS shares, you have to buy 100 and it's going to cost you over $5,000. So I just feel like the barriers to entry are just high for maybe a basic retail investor who wants to buy a stock. I mean, ETFs now we know it's one share on the SGX, which is fine. But what's I mean, the argument for it, for what I've heard previously, has always been, oh, Remisiers and the big trading houses always have this say on they want to sell in blocks and they don't like it, and because it will be like, lower sort of blocks of trading. Do you see that changing in sort of the next 3 to 5 years, or do you think this is something we're going to still have in 10, 20 years in Singapore, Hong Kong?
I would agree that it's quite a legacy issue, right? Where, from days where things were manual, it's not very scalable. These days, I think it is highly scalable, and you can do, so coming from headquartered in the US, where we've seen unit shares for the longest time, what we call unit shares, right? Single shares bought
Yeah.
and sold, and now and even fractionals now.
Yeah, fractionals, right? Yeah. Yeah.
Yeah, and we offer like 10,000 of these things, right? And people like them for whatever reason, big stocks, small stocks, whatever the price.
Yeah.
Um, and from more automated strategies being deployed, like if you want to do DCA, you got to have fractionals,
Yeah.
right?
Yeah.
Because you want to properly deploy the entire sum of money that you're putting in every
Yeah.
on a regular basis. So I think it will eventually change, but as with all change, the legacy that you carry and the existing, I would put it mildly, vested interests.
Yeah. Right. Right.
And the fact that you've got and there's non-trivial lift and shift for not just from a technology perspective for a lot of the existing players. So of course we could do it tomorrow,
Yeah.
right? But
Yeah.
that's not the same. So you've got to try to understand, right? On an industry perspective, it's gonna cost some money
Right.
and some effort. And also from an individual company perspective, because the listed companies, some of them trade their actual penny shares,
Yeah.
right?
Yeah.
So would a single share regime work for those companies? There needs to be quite a fundamental change to say that, look, everybody just got to go through some sort of share consolidation, maybe,
Maybe. Yeah.
right?
Right.
Yeah, and that comes with its own set of problems, right?
Yeah. Yeah.
So I'm sure these are all the things that SGX and the authorities have to look at when
Yeah.
deciding, when and how are they actually, because the devil's in the details, right? It's a great idea, but the execution is what they will turn on. And whether we feel like this can be accomplished within
Yeah.
the next 3 to 5 years, I think it should, but
Yeah. No, because I think that's one
big
thing.
caveats.
Yeah, there's always a caveat to, I guess, as you said, vested interests, right? I mean, because I think you can access some of these blue chips on the Singapore Exchange on sort of DCA or monthly plans, but it's through like an OCBC blue chip plan, and the fees are pretty high, right? Whereas, I mean, personally using Interactive, the recurring investment feature is really great. You just are buying it at the basic commission rate, and it's just done for you automatically, right? And so you don't really have all these, I guess, layers of fees. So that's something that I'm hoping, the markets both here and in broader Asia can change in the next, I don't know, whatever, 3 years or so. But as you said, I guess it does come down to vested interests in total. I did want to touch on one more thing before I go. I mean, gold is a huge topic right now. So, what's your own personal take? Obviously, your own personal view on gold, and do you hold any in terms of physical or just even a small allocation to it? What's your view on the gold situation and generally the gold market?
Yeah, and that is a pet peeve of mine, right? Personally, I don't like gold, mainly, it's a philosophical objection, right? That it's this negative carry,
Yeah.
right?
Yeah.
I do see its value as an inflation or uncertainty hedge. But again, it comes down to what deal are you getting as a retail investor, right?
Yeah.
It's fine to be a sovereign and buy tons of this thing, right? And to store it somewhere so that you have something to back your country's reserves
Mm.
and your currency. It is another thing to be an institutional investor to say that, look, I got to be fully diversified. I want to find something that is not correlated or inversely correlated what I have, and therefore gold becomes, a viable investing option, right? To create a better portfolio, if you will, right? Average man in the street who looks at the price going up and thinks, I should get in, get myself some of that. That's kind of like Bitcoin,
Yeah.
right? And
Yeah.
so to answer your question, no, I do not hold gold, but I hold Bitcoin,
Yeah. Oh,
right?
okay. Yeah. So
That's
yeah.
yeah, but not a lot of it, but that's my lottery ticket basically,
Okay.
right?
Well, and there's always this comparison between the two, which I find interesting. They're saying, oh, Bitcoin's the digital gold. And so I guess maybe in your own personal opinion, what's the difference between it, and why do you have more belief to at least hold a little bit of Bitcoin versus gold? Because neither of them yield any cash flow, right? They're basically just
Yeah,
assets, like I mean, obviously one's a hard asset, one's a digital asset, but they're not giving you any cash flow.
yeah, absolutely. And I think that is the main problem with those.
Yeah.
Um, I would say that what interests me are the network economics,
Okay.
meaning that gold is it's a traditional asset. Everybody kind of gets the network economics,
Yeah.
right?
Yeah.
And therefore, while the price may go up in times of uncertainty, I think people are really well bought into the idea of gold,
Yeah.
right? Whereas for a digital asset or cryptocurrency, it's a little bit different because it's still finding adoption. And I think that potential, for me at least, why it is a lottery ticket, it's a pure lottery ticket. I don't think it is investment. This is
Yeah.
my, if
That
it
you,
goes to zero, it's fine kind of money, right?
yeah.
This is the money that people throw at Singapore pools, right?
Yeah. Yeah.
I kind of see it that way, which is, look, it might work out. It might actually get to a point where so many people use it that it becomes, some sort of reserve currency or widely adopted currency. I don't see that happening in the near future, but
Yeah.
you got a couple of thousand to throw away, why not? Right?
Yeah. Yeah. No, that's a good point. I
Yeah.
guess yeah, I mean there's talk of obviously the launch of the Bitcoin ETFs last year, and then the people talking about it being a reserve type of asset, as you said. I guess that's not in the near future, but definitely sort of in maybe 10 years, 5, 10 years, there could be a potential for that for that.
Yeah.
Yeah.
Yeah. I think that slow integration into the real world economy
Yeah.
drives those network economics, right? But at the same time, of course, it's still very much limited by just the mining cost. It is also very much, I think, limited by its intrinsic volatility, right? So trying to use that as some sort of reserve currency might also prove to be pretty problematic,
Mm.
right? Because it does lack that element that gold has, which is, in the worst case, I have the gold, right? How much is it worth? Don't know, right? But I have the physical thing. So
Yeah.
that lends some psychological, I think, a flaw
Floor
to
to it.
its value,
Yeah.
right?
Yeah.
I've done some research on it. It's an interesting thing, right? I read somewhere that about 10% of the value or the demand of gold comes from industrial applications. So at least that, right? It's not gonna go to zero, it's gonna go to 10%.
Has a use case, I guess. I mean, in terms of the physical world, right? That's I guess what a lot
Yeah.
of does have a use case.
Yeah, I mean it's a great conductor. There are many industrial applications that you can use it for. So 10% of the demand comes from that.
Yeah.
About I think 50% of the demand comes from jewelry, which is also fine, right? Because that is also a luxury good. There
Yeah.
is some value in that. Like LV, one of the biggest companies in the world,
Yeah.
is into luxury goods. So yeah. And the rest of it is true, just pure in a way sentiment,
Yeah. Yeah. I guess central
right?
ETFs.
Yeah, so I feel like gold sometimes is a bit safer or more familiar because you can break it down.
Yeah.
Whereas for digital assets, unfortunately, real world utility still questionable.
Questionable. Yeah. No, totally.
Yeah, and basically zero intrinsic value. You can't use it for much, right? Other than the fact that everybody else holds a piece of this thing.
Yeah.
So highly speculative investment, right?
I think that's a good point to end on there. So thanks for the chat today, Yujun. So everybody, this was a chat with myself and Yujun Lin from Interactive Brokers, Singapore, and some great insights. So thanks a lot for taking the time today to share your thoughts on everything from, money and investing to the products set out there for Singapore investors. And I hope to catch up again at some point in the future. Thanks,
Yep.
Yujun.
Thanks very much for having me, and I enjoyed this session tremendously.